Hello there, ladies and gentlemen, boys and girls. Welcome back to another Forex Market Preview. My name is Jason, and this is the first time you're joining me. Thank you so very much. I appreciate you taking the time to watch this video, and I hope you get some valuable trading ideas from it. And if you are one of the tens of thousands that continues to watch, well, I appreciate that too. So thanks for coming back again and again. Now this week, as I've been covering for the last week or two, been throwing out some trades, but been kind of prefacing everything that I said with, it's in the best market because it is coming to the end of the year, and what we're seeing is a lot of portfolio balancing, and the market gets thinner and thinner, which makes it more susceptible to large corrections around news events. And I said if you're a day trader, you're gonna have less of a problem because there are still going to be some really nice moves on the lower time frames. But as we begin to get out into these higher time frames, you really have to make some decisions about when you're going to start dialing back and taking some money off the table. And so I'm going to show you a couple of trades here that I'm watching, and one that I'm in actually right now, and we'll see how it ends up coming out. What I just want you guys to know is I'm dialing back significantly here in terms of the end of the year, and we're just starting to look to next year. But there are a couple of things out, and I wanted to show you those. And so we're going to start here with pound Swissy. And now this is one we follow quite a bit, and it's one that you don't see a lot talked about. But when we start getting on the higher time frames, it's something that you can absolutely trade. And I want to show you, kind of the power of being able to read a chart. And there's some things that most traders really don't do. If there's one thing that traders that I meet really don't do well, it's technical analysis, which is really sad because most of them, that's how they're making all of their trading decisions, is off of the technicals. But they lack the skill, they lack the not the capacity, but the knowledge and the skill necessary in order to make trading decisions that are going to allow them to make money. And it's because they haven't ever learned how to read a chart. And one of the first things that we cover when I start working with traders is just, how to read ebb and flow of the chart. How do you begin to look at the markets as they move and say to yourself, well, at what point can I look to make trading decisions? And once you start to make some of these decisions, once you start to be able to see what's happening in the market, you can start to make projections as to what's going to happen next. And that's exactly what we did here. What you're looking at and what I've just drawn in is what we call harmonics, and it's just simple, what we would refer to as measured moves, meaning that they are roughly equal to one another. Now, one of the things about harmonic moves is that they're not always equal. They're not always exact. You don't always have one that runs exactly from here to here and exactly from here to here. But what you can see is there's some very nice symmetry that happens here as these markets begin to move, and especially then again as we go this direction. What we can also do here, if we go ahead and grab our line tool here, is we can grab from the low to the high, all the way up here, and we can kind of ignore this little correction here that we saw. Now, one of the hardest things for traders to learn as we're coming to this is they don't naturally see this. Their eye isn't naturally drawn to this, what we would consider an anchor leg. It's not drawn to this because they haven't trained their eye to recognize these moves as they happen. We can begin to look back here, and we can also see again the movement that occurs in this area. And again, this is not exact, but it's pretty doggone close, where you get some very nice harmonic directional movement. Well, we also get, if we drag from here to here, another anchor leg. And so we get some very, very nice moves. And the more you work at this, and the more you begin to train your eye, and if you've got somebody around you who actually knows how to do this and can look at it and say, yeah, that's right, or no, that's not right, well, that's even better. Let me just fatten these up here so we can see it a little bit better. We start looking at all of these different legs of the move, and we can start to make some projections as to what the market may do next. And actually, for all of you who gave to Jack's cause, I put out the call last week to give to Jack as he was going to be swimming the 50 laps. And for those of you who gave to him, I'm going to be teaching a lesson to you guys that's basically based around this. It's understanding why markets move, why money moves, what causes it to shift from one place to another, and then how do we use technical analysis in order to be predictive in what's going to happen next. And as is evidenced by this, we took a look at this. You'd have to go back, I think, a week or two to find when we discussed this. But what I was showing you guys was basically this setup. Now, what we had was we had this anchor leg back here, and then we had what's referred to as an ABCD pattern. For those of you who don't know what that is, an ABCD pattern is just a harmonic move, which is what we saw right here. We saw this leg of the move was equal to this leg of the move, and the market was pressing down, and I think we were somewhere around this area when I started talking about it. And I said, we almost made it, but we didn't quite make it, so we don't quite have a completion there, but the market was heading back down this direction. And we were looking at this area here. And I brought in a Fibonacci extension, and I went from swing high to swing low. Now, if you don't know what a Fibonacci extension is, don't worry too much about that, because that comes with time. But I look at three different Fibonacci's, the 127, the 1414, and the 1618 extension. And as you can see, this 1414 comes in, if I draw in a line here, I'm just going to draw a line in right on that 1414. Now look left, because structure is going to leave clues. What do we have back here, right at the base of this anchor leg? That's a double bottom, isn't it? Double bottom, look at the bottom of your screen. You've got bullish divergence on your RSI, giving an indication that the market is going to rally, and look at what it did. It took off like a rocket. It ran from about 48.30s all the way up to 51.44s. Would have been a nice one to be in on if you were a counter-trend divergent style trader. But now the market's come back down in, and we've got a nice little harmonic pattern that is completed right there at that 1414, giving you a buying opportunity. And that's what we were looking at, was a potential buying opportunity and a rally out of there. Now the way we do this, when we grab our Fibonacci retracement tool and go swing high to swing low of the entire leg of the move, so we're going all the way from the top to the bottom. Now if I'm losing you, don't worry, because this is recorded, so you can go back and watch it again and again and again. But as this market comes down here into this 1414, we look for buying opportunities, and then we're going to look to clean off our profits. We're going to want to know, where do we take our profits? And that's something that we want to know before we ever place a trade, is where are our profits coming out, and where are our stops going to have to go? Well, if we know that the support is coming in at this double bottom back here, well, we know where our stops have to go, don't we? When they need to go just under these lows. So we can go ahead and grab our line tool and come down, put our stops in here. Let's just go ahead and change this color to red so we know red'll mean stops. So we'll change that to red. So now we know where our stops are, and we know where we're entering the market too, don't we? Right here around 48.31s. So our risk on this particular trade is that much. That's all it is. Very short, little, small risk. Now, where's our initial target? Well, we always look for initial targets around the 382 retracement. That would be right here. And if I look left, look at what else I'm going to see. I'm going to see structure and structure. I'm going to see a little bit of structure right in there along that 382. So that means as I take my long position here at the ABCD pattern completion, I'm going to be looking for my initial targets around the 382. And as you can see, we got there. So that means that this is my potential reward, isn't it? There's my risk. There's my reward. Now, I have to ask you guys, how many times would you be willing to take that? What is this? Let's just grab our little line tool here and just see it. It's 1, 2, 3, 3.5 to 1 on the risk to reward. What we're risking to what we stand to gain. And that's just on the initial target. Once the target 1 is met, then we roll our stops to break even. And we can then look for extended targets. Extended targets for us is typically around the 618. Now, why the 618? Well, look left. Structure, structure. So not only I'm combining my ratios with my market structure in order to make trading decisions and determining not only where to enter, but also where I should potentially exit the market. Now, This is critical because you get a lot of traders who, when they start looking at Fibonacci and ratio analysis, they start looking at this and they say, well, this stuff doesn't really work because I've been pulling ratios and sometimes it's a 382 and sometimes it's a 786 and I can't get it to work, so it must be a bunch of malarkey. And it just comes from a trader who hasn't been properly trained in how to use them, because Fibonacci's are just a tool. The harmonics here are just a tool. They're not always perfect. They don't always work. Nothing is going to be perfect. Nothing is going to be right 100 out of 100 times. But here's what we do. When we combine the market harmonics with the market structure, and then we can come in with our Fibonacci extension and we can get a Fibonacci ratio to line up right with that 1414 is being covered, right with that structure. Well, now we've got something that we can potentially use, don't we? And then when the market rallies and we look left and we see at the 382 we've got structure and we see at the 618 we've got structure, well, now we can combine our ratio analysis with our structure, our understanding of structure, in order to determine when to get in and when to get out of the market. Now again, this is all stuff that I cover in great detail with clients, but you guys are seeing this for free, and I apologize to those of you who know this, but it's a good refresher for you, even if you do know this, to go over it again and again and again, because it helps refresh it in your own mind. Now this is what we call being in the ebb and flow of the market. It's what I call being in the market's OODA loop. And OODA loop is actually pilot theory from the military, and if you guys have heard me talk about OODA loop theory before, it's a really interesting concept. But basically, you're trying to stay one step ahead of the market. You're trying to anticipate and predict what the market is going to do before it does it. So now that we've looked at this and we've looked at our initial targets coming off and our secondary targets coming off, haven't quite gotten there. If you were front running your orders, you may have gotten filled, but we haven't actually hit our 618. So we haven't quite gotten to target 2. But what's our next play here? Where do we want to go from here? Well, those of you who are students and who understand the Cipher pattern, we're going to look for another pattern formation coming out of this. So this is not technically this is technically a Gartley pattern that we just saw. And I'm going to go ahead and draw it in for you here so you can see it. Looks like this. This is the Gartley pattern, and it completes right at previous structure, and we've rallied out of that. We've almost hit target 2. Now there's another pattern in here as well. This is called a Cipher pattern, and it looks like this. I'm going to go ahead and change the color here so it's easier to see. And then what we're going to look for here is roughly a 786, which should be right around there if I'm not too far off on my eyeballing. The more you do this, the better you tend to get at it in terms of being able to identify where these patterns are likely to complete. Now, in order for the Cipher pattern to complete, we have to come into a 786, and look at that. Just that's what happens when you get really good at this and you start to train your eye to recognize the patterns, as you know just about where that 786 retracement is. So if, again, what is a big if, but if the market continues to rally here, we're going to rally up into this 786, and we're then going to look to short this market at the 786. Now this defies all laws of logic in a lot of cases, because we've just broken structure, haven't we? If we hit the 786, we'll have just broken structure above these levels. And we're going to be out in kind of no man's land here. And it's going to defy, pretty much everything that we think of when we think about where we want to be long and where we want to be short. Now, the reason that we know that this works, and the reason we know that over time, if we trade this way, we're going to be successful, is because we've tested it for months, and I've gone through and talked with many of you about the Cipher pattern, which is a pattern that we discovered at Triple Threat, in terms of how the process that we went through to evaluate it and make sure that it was profitable, and make sure that if we traded it again and again and again and again, that over time we'd make money with it. And it's been phenomenally successful at predicting market corrections. And so when I talk about staying inside the market's OODA loop, what I'm talking about is, we see the ABCD pattern. It comes into the double bottom and we have opportunity with 1-4-1-4 ratio confluence to buy, and then the market hits target 1 and almost hits target 2. If the market hits target 2 and we come up to 786, we're going to be sellers. And we're just going to continue this process as we wait for the market to give us the next signal, to give us the next pattern that may emerge. And it is amazing how many times you will see this happen again and again and again in the market. But it only works if you can identify the pattern, if you can identify what's happening in the market. And if you haven't learned the skill of reading a chart, if you haven't learned the skill of technical analysis, then none of this is going to be useful to you. You must learn that first, and that's one of the reasons that I started putting this video together, is to begin to teach you how to start identifying some of this stuff every single week as we go through the Forex market preview. Now, let's take a look at a couple of other things. A couple of trades here that I want to look at. Just give me, I can't remember exactly what I was wanting to see, so let me just cycle through a couple of things. I know one of them, Euro New Zealand. This is one that I'm in currently. And if you look at this, you can see I'm not up very much, 9-10 pips, something like that. It's not a lot, and we'll see whether or not that's a positive or negative number after the market opens. But basically, what I was looking at was, let me get this right. Now we're right here, up here to here. I think we went here to here, then back down in. Market came into the 127 extension, and then we were looking for that 786 retracement, which we hit on Friday. And this gives us, again, guys, we just looked at it on the other chart, gives us a nice cipher pattern. And what we would expect is this market will rally from here. Now, we're extremely oversold coming into that 786. We got a little bit of structure back here. That's going to add to that potential reversal signal. And we're going to see if we can just get a little pop out of here. And if we can, we're going to take a little money off the table. But this is one that I was watching, and the market rolled over very hard, went oversold, and it ended up buying it up right here at this 786. Now, again, this is something that you look at, and the majority of the market is going to be thinking, I've got to wait for a rally so I can sell, when we're going to be stepping in and buying these up right at this 786. But look at what happened there. As the market came down in, boom, we got an initial pop right off that 786. Now, we came right back down in the very next candle, and we kind of closed break even for the day there because it was Friday. And we'll have to see whether the market will give us any profits out of this or not, or give me any profits out of this. But this is exactly what we want to be doing every single time we trade, is looking for that pattern formation, looking for the market to give us a signal as to what it intends to do, and then taking action. Let's look at Euro Aussie. Euro Pound here. Euro Pound is going to give us another one. This is another cipher pattern, potential cipher pattern completion. And I'll draw this one in for you as well. And we're sticking, kind of with the cipher patterns today, just because it's easier to talk about one thing than to talk about 10. But we look for this market to press down into the 786 for buying opportunities. Looking for the euro to rally here out of the 80.35s level. And again, if you guys need to, just watch the video a couple of times before you begin to do it, and then get your charts out and start drawing this stuff in. One of the easiest things to start doing is just to start identifying harmonics. Just seeing where the harmonics line up. Where do we get some harmonic moves out of this market? And again, they're not always perfect. Sometimes they're a little bit long, sometimes they're a little bit short. But one of the nice things about working through this process is that you're starting to train your eye to see them without having to draw in the line. So your eye starts to get attracted to these things as you're going through it. And I'm just looking at this stuff as I go along, and I think I remember this trade that we took. But if I draw this in, we're going to see another cipher pattern back here where the market came down in, boom, up into right onto the 127 extension, caught the 786 a little bit deeper, and then rolled over. Got a nice little winner out of that if I remember right. But anyway, I just wanted to go ahead and show you some of this stuff. So basically, the ones I was looking at here are Euro Pound, We also had, let me see here, Euro New Zealand, which I'm currently long. And then we also had, what was the other one I looked at? Wasn't that one? Canada? Nope, Canada had a breakage structure. That was something else I was watching. Euro Aussie? Nope. Okay, so let's just go with those two for today. But anyway, so I was a little heavy on the education this time. I know a lot of you guys come here just for, you guys are skilled enough that you come here just to validate what you're doing, and some of you come here just to get the trading ideas that I put out. But I wanted to take some time, since we're coming into the end of the year and it's a little bit slower, to actually teach you a little bit and hopefully help you walk away with a little bit more knowledge. And we'll do this from time to time, those of you who are new. I'll take a break out just to kind of teach a little lesson. Naturally, if you want to know more, the Syndicate is a great place to start. You can go to Forex Market Preview. I promised you guys a big surprise this week. Last week I told you I was going to hold off on it, and I'm going to go ahead and tell you right now. We are starting, or Triple Threat Trading as of January is going to change names. It's going to become a new company, and we're going to be taking the Forex Market Preview, and we're going to be taking the Trading Authority, and we're going to be taking Triple Threat Trading, and several of the different brands that we have that we started, and we're going to combine them under one new website where you're going to be able to get all of the information that you need in one spot. And the reason that we've got so much stuff out there is because we've only been doing this, my business partner Todd Brown and I have only been doing this for about 3 years or so. And we really, when we started, didn't have any idea what we were doing. We're a couple of traders who wanted to teach, and we were trying to grow the business. And every time we came up with a new idea, we just figured we'd start a new website because we knew how to do that. So we ended up having like 3, 4, 5 websites out there that really was confusing a lot of people. And so what we decided to do was we said this is the perfect time now that we've got kind of all of our ducks in a row to kind of consolidate and give you guys one really cool place where you can go and not only get all of the information, like all the stuff that a lot of you guys subscribe to, but also where you can get a lot of really valuable information. We're creating kind of a hierarchy inside where you can start talking to traders and other people who have been successful. Guys in our mastermind group will be able to answer questions that you have, and basically just providing a network for you to grow, and basically a place where you can become successful and get the tools that you need to do that. I'm going to hold off on the name because we're still working on the website, but that will go live January 1. In addition, we've also are in the process of finishing out a 4,000 square foot facility here in Kansas City. We're going to be doing some trainings and some education stuff here locally, and we're going to bring you guys out and actually get a chance to meet with you and work with you one-on-one. I'll be showcasing that with you guys after it's done, right after the first of the year, and we'll be having a big event in March, I believe. So be on the lookout for that. If you would like to come out to Kansas City and train with us, we're going to be doing a 2-day workshop in March, and more on that in the coming weeks. So until next time, guys, good luck and good trading. My name's Jason, and don't forget to sign up to get this video emailed to you every week if you don't already. So until next time, good luck and good trading. I'll talk to you soon.